Hi, and welcome again to another edition of Market Analysis for today, January 23rd, 2023. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. All right, just a few weeks ago, markets were convinced the Federal Reserve will start cutting rates in March. Now they're not so sure. The odds of a March move are around 40% now, compared with a 60% a week ago and 75% a month ago. The good news is that the much heralded soft landing still looks like it's happening. That's the scenario in which inflation rates retreat back to around the Fed's 2% target without a major economic crash. Fourth quarter growth is expected to come in at annualized 2% in GDP data scheduled for release on Thursday this week. That's much slower than 4.9% in the third quarter, but it's still not bad. Earnings so far are also backing up the case. They haven't been spectacular, but they haven't been miserable either. They're expected to rise in the fourth quarter, which is much better than a year ago when they fell 3.2%. Banks are doing all right with higher interest rates now. Stocks beyond the technology sector, especially those with smaller market capitalizations, look poised to do some cashing up. Another sign that the economic outlook is benign is how little is being discussed in the presidential primary as New Hampshire goes to the polls today. All told, it looks like the market is reassessing the outlook for rate cuts without changing its view on prospects for earnings, stocks, or the economy. That will make Fed Chairman Jerome Powell's job a little easier when the Federal Open Market Committee reveals its interest rate decision next week. If a March cut were still priced as a shoo-in, he may have had a lot of work to do to rework expectations. Okay. For stocks, the economic outlook is more important than interest rates per se. That's why it seems to be smooth sailing for now, with more record highs expected. So that being said, let's take a look at the NASDAQ. All right, so yesterday we talked about that fluctuation to the upside, that conviction, that amplitude in range was not gonna be that deep. That we most likely will see a retracement and a pullback, and we saw that. Okay, today we're seeing how the markets are in yesterday's range, so we can expect to revisit yesterday's high. Now, 17,600 is going to be that psychological resistance level again. So we might touch it, kiss it, and retreat again, almost like we did yesterday. We just said that the high was 17,583 on this candle. So we can expect that to happen again today. So we could be going long, buying the indices, NASDAQ, also as well for the S&P 500. The S&P 500, however, the only thing is that it's open with a very small gap up. It's been closed, so the momentum is building up. 4,900 is going to be that psychological internal resistance level, which we almost reached yesterday, just by 3 pips really. All right, so let's see if that's going to be the case for today. So going long, buying the S&P. The Dow, however, it opened also with a small gap up. It's being closed. It's trading lower. Let's see if it does continue to push lower. Will 38,100 be that internal support level and then rebound again, just like it did so today, which is the lowest 38,103. So let's see if that will be met, or has the bounce already happened and is going to recover and revisit yesterday's high. Crude oil. Okay, so yesterday we did fluctuate above 75 and quickly retrace and close below it. So today we are we kind of just pulling back, giving back all of that gain that we saw yesterday. But this is creating an asymmetrical triangle. So I might just say that we're gonna be idling around $74. Then we have nat gas. Okay, selling nat gas. It opened with a small gap down. Actually, it opened with a small gap up, but it's trading down. So I'm gonna the whole scenario is for to trade lower. So 230. I'm looking for that target 230. Selling initially nat gas. Then we have here gold, which Gold also is just creating this range, all right? So this $20 range, 2020 is the support, 2040 is the roof or the resistance. So I think it's gonna happen again unless we see something spectacularly of movement from the U.S. dollar index. Like if we see that the dollar index pops to the upside, trades towards 103.5, or we're definitely gonna see gold then just tank. Okay, most likely will break to 2020 and then be looking trading towards 2000 if we see the dollar index trading at 103.5. If we see the dollar index trading below 103 towards where it traded today, which 102.758, then gold, you'll see gold reaching, coming back up to that high, and most likely reaching and surpassing 2040 and perhaps kissing my resistance of 2050. So keep that in mind. Initially, I'm just saying, I'm thinking that it's gonna be one of those days like yesterday, very tight range, so a lot of idling, just sideways trading, chopping, a lot of chop. Silver opened with a gap down, closed it, and is trading higher. Again, I'm looking at this just to stay idling around 22 and a half. Copper is trending higher. Let's see if it'll recuperate. If this pullback is enough for it to come back and find more buyers and then take it to 380. Then we have Bitcoin that is just just retreating rapidly. So 38,000 is that support, that target sell crypto. Currencies, looking to stay north of 108.5 for the euro and 126.5 for the pound, and that will happen if we see the dollar index just drop again. But if it continues to trend higher and it reaches 103.5, we will definitely see then the pound and the euro trading below their support levels. So keep that in mind. Have a great trading day. I will see you tomorrow.